Welcome to another stage analysis video. It's Sunday the 2nd of July 2023. We've got a fair bit to get through on the weekend video as always. Normally runs for between an hour and a half in total, but you can break down the video into smaller sections as obviously certain parts of the video are not particularly time dependent. So start off with the major indexes before getting into the industry group relative strength rankings, the futures charts, the IBD industry group bell curve, the market breadth charts, the stage two, some of the stage two breakouts or stocks in early stage two, just to have a look at, and before getting into some of this week's highlighted watchlist stocks. So we'll get through that in time. But as I said, starting off this week, going to start with the major indexes as always. Obviously kicking off with the S&P 500 here, which, and this is the weekly chart, which has been in stage two for a little while now. It's been highlighting on these, obviously the weekly videos and on the website. So it's now pushed up with our percentage of stocks. This is the custom breadth tool that we use on the website as our sort of version of the Stan Weinstein's proprietary indicator, where he looks at the amount of stocks in stages 1 and stage 2, his stages survey, which he talks about in his original book. But this is a sort of easier way to do that, in terms of you can get a very similar kind of output by using the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages combined. So it gives you it's roughly very similar in the process if you're looking at short, medium and longer term moving averages and how the stocks are relative to that. So at the moment, we got just over 54% of stocks above their short, medium and long-term moving averages here, and above both its own moving averages. So we're on what we consider a positive environment at the moment as the market here, the S&P 500, moves up higher into stage 2. But obviously on a weekly chart, looking very strong there. But potentially, we drop down to the daily chart here. There was something of note that we're obviously got potential for a short-term base structure potentially starting to develop here. If we had a big move on Friday, fails to follow through here, we could be starting to form the sort of early signs of a classic base structure, what we call phase A of a base structure. So we've got our buying climax, automatic reaction, potential secondary test at the moment. So this, if we do start to roll back over here again, we could be starting to develop a new sideways structure here for a little while. But obviously if it manages to continue through, then obviously trend, it's in a short-term uptrend, and how we define that, as I've said, is being above this plus 1 ATR level. So you can see we've been majority of the time above the plus 1 ATR level in the last few months here now. So, but obviously a little bit of a change of behavior here recently with the move back below it and then rally back again. So as I said, short-term potential start of a base structure, but if it does follow through, it was fairly strong on Friday, but the other indexes not as strong in terms of they closed below obviously their earlier the June highs. So S&P 500 actually one of the only ones pushing to higher highs here. You can see percentage of stocks above their 20-day moving averages in the S&P 500 up to 83.4%. So we're in the upper zone. So when we're in a short-term uptrend, tend to hover above this 70% level and tends to hold above there with the occasional dip back below. But the dips tend to be curtailed in the mid zone of the chart. So for the vast majority of the time, they tend to hold above that 70% level. So at the moment, obviously in a strong position, 83.4% above their short-term moving averages, roughly 1 month moving averages there. We can't do a 21-day moving average. We don't have the data for that. So a 20-day moving average will do for that. If we look at the NASDAQ 100, continues to be the leader at the moment, above the 70% level on its 200 percentage of stocks above its 200-day moving average. We're at 75%, so 3/4 of stocks in the NASDAQ 100 obviously above their 200-day moving average. So very, very strong stage 2 advance in this one over the course of the last 3 months or so now. So, but obviously getting up to old areas of potential resistance here. So obviously very technical levels. They're obviously long past being actual physically close resistance levels, but we're getting to a technical level that people would look to. So at the moment, obviously, again, if we drop down to the daily time frame on this, we've got similar sort of behavior here. We've moved out of the free ATR level here with a short-term buying climax, roll back over again. We've had an automatic reaction back towards the 21-day EMA here, reverse back up again, and it's pushing up back through again. So potentially we could obviously be developing a secondary test here, and it could start to form a base structure of some kind, whether it forms a VCP, whether it has a deeper base, or whether it makes a continuation. Obviously, at the moment, it's anybody's guess. We're just very early in the process at the moment of a slight change of behavior here. You can see these obviously swing pullbacks as it was accelerating up and getting above the free ATR level there. We've got this slightly bigger, it's not quite a huge change of behavior yet. It's not hugely significant, but it is obviously different to what we've seen with the free prior swings before this one. So a little bit more conviction on the pullback there. So potentially, as I said, with the S&P 500 there, we could be developing the start of a structure, but obviously that would be negated if we started to close above and hold above the obviously the June high here. Percentage of stocks above their 20-day EMA in the NASDAQ 100 sitting at 74%. So again, very strong in the short term, just recovering from the pullback state there, which again got down to close to the 50% level. So we're now back into the upper zone again. Same with the NASDAQ composites, very similar behavior. Obviously, start of a potential base structure, maybe. It's got much weaker in terms of the percentage of stocks above their 200-day moving average in the NASDAQ composite low, which is only at 40.99%. So we're not even up to the 50% level at the moment. So you can see, look all the way back to 2020, 2021. See, at that point during the obviously long stage 2 advance that we had in the NASDAQ composite, it was above the 50% level, and ideally we look for above the 60% level in that, to look when we're in the stronger part of stage 2 before it starts to get into the later phases. So you can see the breadth was tailing off, got down to current levels down and around August time back in 2021 there. So at the moment, still looking strong, and it is improving. We continue to make obviously higher lows at the moment, but we need to see some follow through in the moving average breadth there. On the daily, again, very similar story. Short-term buying climax, automatic reaction. Is this a secondary test? We don't know yet. So potential start of a base, but certainly a change of behavior over these prior swings that we've seen here. Obviously, it's a much bigger pullback, so more significant. So hence, there's potential it is phase A of a small base structure here, but doesn't mean it's going to roll over and fail. But obviously, it's certainly a change in the behavior there. NYSC testing up towards its stage 2 level again, so it hasn't been there for a little while. We had this significant bar down in March when the regional banks failed. Obviously, NYSC had a lot of exposure in that area, as did the small caps, so obviously shook out for a while. So we've been in this broad stage 1 structure for a while, and in the tighter structure for obviously since December sort of time here. But at the moment, within this sort of tighter area, it's testing the top of the range there. But in obviously the longer resistance zone, we can see has been tested multiple times over the last few years or so, is now, this is our significant area. If we start closing back above this 16,000, 16,200 area, then we would be back in stage 2 in the NYSC, and obviously that would be very bullish for the market. So obviously this is where the financials and etc. live, which are obviously a big driver of the market, and we need both the NYSE and the NASDAQ to both be in gear in order for the market to have a stage 2 advance. And this is why at the moment the breadth tools, etc., are all showing a very mixed market, because a lot of the NYSE areas had been lagging as such. So at the moment, percentage of stocks low in the NYSE is actually getting stronger. We're at 61.37%. So there's actually more stocks in the NYSE above their 200-day moving average than there is in the NASDAQ, around 20% more. So, but it's still in stage 1, whereas the NASDAQ is strongly in stage 2. Russell 2000 testing its stage 2 level again. So again, this is a major resistance zone that has failed to push through convincingly. It had a failed breakout attempt back in February, which rolled over. Again, that regional banks crisis shook out and then it held down in this lower structure down here, and it's now moving back up into the resistance zone again. We pushed up on Friday. Relative strength versus the S&P 500 is still significantly underperforming low. So even if it does break out into stage 2 here, it's still the weaker area of the major indexes. But if that can start to recover, start to get back above its zero line, then that would make it obviously more favorable again. Look at it from the daily chart quickly. So as I said, still in the resistance zone. So looking for that clear move above the 190 level here. Ideally, you want to see some stronger volume. If it does, not with indexes, it doesn't really matter so much. It's more the smaller individual stocks where volume is more of a driver. But on the bigger, larger cap stocks, etc., especially the mega caps and the indexes, it's not so much of a major factor. It's you want to see some increase in volume, but you're generally not going to get the excessive amount of volume, the 2 or the 3 times like he talks about in the book when you're looking for stage 2 breakouts. That just doesn't happen with the indexes really. So next up, I just wanted to show before we moved on to the futures charts, the IBD 50 has had a stage 2 breakout this week. So this is the daily chart. So since the start of the year, we had that selling climax, automatic rally, some secondary testing, lower testing through there. So got a base structure started to develop, started to build some higher resistance levels here. First pivot above the 200-day moving average is generally what we look for when it's a little bit more messy for the stage 2 level. So you can see here, had a little attempt a few weeks ago here, so potentially the stage 2 breakout attempt, but immediately pulled back in again. Didn't undercut the 200-day moving average or so here. And obviously it's pushed back out again more convincingly now. So whether it was a few weeks ago, or whether it's come in this week, doesn't really matter here. You can see on the chart here, on the weekly chart, the weekly pushed above 3 weeks ago there. So that was a potential stage 2, but this week had more significant volume and a much bigger, obviously, price action candle there. So 5.3% on the week. So potential early stage 2 breakout on this one. If we just make it a little bit bigger, let's see that a bit more clearly. And actually, let's give it a bit more time. So you can see the entire move over the last few years. So the original move into stage 2, obviously start of stage 3 type behavior through here, where it's had a change of behavior, had a up thrust after distribution and rolled over. So it actually broke down into stage 4 around this area through here as the 30-week moving average was rolling over, and it was still within the broader structure. You don't always, the start of stage 3 doesn't always mean the low of that range is the ultimate stage 4 level. Sometimes it's, as obviously time goes on, the longer the stage 3 or the stage 1 takes, obviously the levels can change. It's when you're looking for those significant levels within the structure, you look at where the 200-day is and how it's relative to that. So if I change this to a 40-week moving average for the 200-day moving average, you can see that the first pivot below, this pivot below the 40-week moving average here. So this would have been stage 4 breakdown area here at the time. So you can see now we're now above the 200-day moving average here and moving out and obviously above the structure. So it's obviously clearly now into early stage 2. But because of the length and depth of the decline in this one, and you can see relative strength still underperforming, it's going to have a more significant overhead resistance. It's more of it's been a lot of laggards in this one. I'm not sure of the constitution of the IBD 50 and how it's made up, but it's certainly been a laggard similar to the ARC ETFs and the IPO ETF. They've all major growth ones have lagged a bit compared to the S&P 500 growth, for example, which has broke out into stage 2 a while ago here and been moving strongly higher. So obviously the IBD 50 has been somewhat of a laggard there. Okay, let's move